U.S. trade deficit widened by the most in 8 years in April as exports failed to keep up with imports. Consumer demand is still high for imported stuff, but exports on the U.S. for energy products fell in April because of a strong dollar and weaker global demand. And that pushed the trade gap to its highest level in 6 months, causing some economists to worry about the impact on GDP growth. It is midweek, and we're going to check in on how the U.S. markets wrapped up today, and that means saying hello to John Terrett from the NYSE.
In New York on the Wednesday session, there was plenty of green and red on the screen. It was a mixed color sort of day, which is interesting because if you mix red and green, you get orange, and that's how we were surrounded here at the New York Stock Exchange during the Wednesday trading session at about 2 p.m. in the afternoon, when smoke from the wildfires in Quebec province in Canada surrounded us here at the junction of Wall and Broad Street in Lower Manhattan, and the sky and the air around us literally turned yellowy orange. It was a remarkable, remarkable thing. Cleared up a bit as the afternoon went on, but to be here and see that was extraordinary. People are wearing masks again now in New York as if it were the COVID era all over again. And it's not likely to clear up until Sunday. And we have Major League Baseball games now being canceled because of this condition in Philadelphia and in New York. On the markets, as I say, green and red on the screen. The Dow was green, ahead by 91 points. The Nasdaq was down 171 points, or 1.2%, worst day since April. S&P 500 down 0.4%, and Bitcoin at 26,000 down 1.6%. And into the thinking today went the trade deficit figures announced earlier in the day in the United States and in China, and also now that we're on Fed watch for the next interest rate decision on Wednesday next. Now, in the Thursday session, a couple of things will happen. Early in the morning, we'll get the latest weekly jobs report, which is the number of people signing up for first-time unemployment benefit. It's a key indicator of what the Fed may do regarding interest rates in just under a week's time. And it is the 75th anniversary of the first road-going Porsche car out of Germany. John Terrett, CGTN, on the trading floor of the New York Stock Exchange.
More on the that smog from the wildfires from Canada, but first we're going to dive into the markets and economy with William Lee, Chief Economist at the Milken Institute. Good to see you again, William. Let's start with the global markets, because the last time we talked, we were still worried about the banking issue. We were thinking about what might the Fed do or not do. Since then, we're sort of expecting a pause. The economy seems to be strong. Even the fact that if you look at unemployment rates, yes, it popped up, but it's still well below 4%. Some people were expecting 4 or 5%. Inflation seems to be in check, but there are some worrying signs. Where do we stand now?
The markets are really worried that the Fed will not pause. In fact, they're worried that given what the Bank of Canada did this morning, they raised by 25 basis points, they thought, wow, why is it that the Canadians and some of the other Anglo-Saxon central banks are raising rates in an economy where we seem clearly to be slowing down? China's exports show you that the rest of the world is not doing very well in terms of importing stuff from China. U.S. actually is doing quite well in terms of importing stuff from the rest of the world. So here we have a bunch of mixed signals, and I think going into next week, people are really worried that the Fed will not pause. They'll be raising rates as they promised they would.
As an economist, I'm sure you can appreciate this, but it's not like we get black and white signals like, oh, this is time to raise or this is time to cut. So one, you have the fact that they are mixed signals, which I think is expected. But the flip side of it, too, is that the rate hikes that took place starting from basically last year to today, don't you have to give it some time to work its way into the system? I mean, a lot of economists are saying, wait a minute, just give it some time. Thus, those are the folks in the pause camp, right?
Absolutely. And in fact, if you give it enough time, we're going to get into the next cycle. I think what many economists are asking is, if we're giving it enough time, why don't we see any effect on inflation? Why don't we see inflation coming down the way it's supposed to? In fact, inflation has been stuck at about 4 to 5% for the longest time. And I think that's why people like Loretta Mester and people on the FOMC and say, we just haven't tightened enough yet because people are still spending. People are spending like crazy, and that's what the strength of consumption is.
This makes no sense. We're so mad that the economy is strong and that people are spending money. We want the economy to basically go into hell so that people stop spending money and everyone's jobless. It just, if you explain this to an average person, they just start scratching their head. What, you want all of us to basically lose our job? It doesn't make any sense. But here's something I want to point out. The inflation target of 2% appears to be very outdated to me. Is it possible that 2% is not a realistic target to begin with?
The number 2% was set because that was where people said, once it hits 2%, I don't worry about inflation. I don't even think about inflation anymore. So it's the Fed's target is whatever number is that people don't think about it. And right now it's 2% because they've stuck with it for so long, if they give up on that target and start raising it to say, well, 3's enough, that kind of slip is what makes people worry that they'll get a slip some more, and maybe 4's enough, and maybe 5's enough, in which case we're going to get runaway inflation. Expectations are really very fragile, and they have to make sure that people believe the Fed when they say we're going to get to price stability, which is where you don't worry about inflation.
Janet Yellen was talking earlier today in another interview, and I was listening to this, and as you know, she's currently the Treasury Secretary, and she was the former Fed chair, so she has obviously a lot of knowledge of how the inner workings go on based on the Fed. And she was asked a question about, you know, what data are they looking at? And she didn't give a very clear answer, so shockingly so. So let me ask you, what data are they looking at when it comes to inflation? Because no matter what number you tell me, it's definitely backwards looking. There's no forward looking inflation data. We're really all just guessing. If they're just going to base it on inflation and raise rates or not raise rates, it just seems to me that's a system that is going to create a lot of consternation from people like us who are analyzing this. There is no clear sign in either direction. Shouldn't they just pause then?
They're looking at the labor market. I think that's really the gist of it. Service inflation, right? The price of services, not goods, that has been stuck at 4 to 5%, and it's stayed that way because people keep spending on services. And no, I'm not telling you that we should put the economy into a hell in a handbasket, but instead we should get people to say, stop worrying that you're not spending enough. Stop worrying that you're not going to get your vacation in time. If you just delay your vacation by 6 months, that'll do a lot to calm the inflation pace. That's all the Fed is trying to do, is to say, delay your expenditures, smooth it out so that we don't get these bottlenecks. And that's where the source of inflation is right now.
William, I'm sorry to tell you, the kids do not want to delay their vacation this summer. Okay, they're going to go on vacation just like everybody else, and that's why airfares are up, hotels are up, and life has to go on for everybody. Why can't we just admit that we have to live with higher inflation? You want to increase the minimum wage, you want to pay people more, you want to give everybody more stuff, things are going to cost more money. You can't have it both ways.
When you and I were kids, what were we doing? We're getting summer jobs instead of going on vacation. All I think the Fed is asking that people do is, hey, consider getting a job and putting that vacation off for 6 months.
All right, we have some internships here, I think, at CGTN.